Well, at the moment, obviously, we have maintained status quo in our rate cycle so far. After our rates, we increased it up to 6.5. After that, for the last 2 years or so, we have maintained status quo with regard to the rates and with regard to the monetary policy stance. The latest inflation print for August has come out yesterday. So next monetary policy meeting will be held in first week of October. So the monetary policy committee will take a decision. But having said that, let me say that we have to really see how the outlook is. It's not a question of that in the in the current context. In the like in July, the inflation came to about 3.6. That is the revised number now. Yeah, 3.6, and August has come at 3.7. So it's not so much how the inflation is now. We have to look at for the next 6 months, for the next 1 year, what is the outlook on inflation. So therefore, I would like to sort of step back and look at more carefully what is the future trajectory of inflation and growth, and based on that we will take a decision.
And we'll talk about inflation outlook and growth outlook for the long term, but I do want to understand from you, as we speak, is the MPC at the RBI actively considering a rate cut, and will that happen in the October meeting?
No, I can't say that. First, in October we have a new MPC, in the sense that the external members will be new, because the current external members, their tenure, 4 years tenure has ended. So there will be new members, external members, 3 members who will be inducted into the MPC. So we will discuss and decide in the MPC. But so far as growth inflation dynamics is concerned, 2 things I would like to say. One, the growth momentum continues to be good. India's growth story is intact. And so far as the inflation outlook is concerned, we have to look at the momentum, the month-on-month momentum, and what is the momentum of inflation, build up or moderation, either way. So what is the momentum of inflation trajectory in the coming months? So the outlook we have to look at. It has to be a forward-looking approach. So based on that, we will take a decision.
Many analysts and economists believe that the RBI doesn't give forward guidance on rate cuts or policy direction, decisions. And so I wonder, why does the RBI not do that? So why don't you prepare the markets ahead of time on a policy pivot?
It can be very risky because it applies both ways. So if you give forward guidance, sometimes, given the uncertainty that surrounds us in the world, and today it's a fast changing world. The day before the Ukraine war started, nobody thought that a war of this magnitude and this length will happen. The conflict in the Middle East came suddenly. The IT outage which confronted all of us some 2 or 3 months ago on a global scale, that also came suddenly. Geopolitical events are happening with suddenness which we have not seen before. Climate-related developments, weather-related developments are also coming with the kind of suddenness which we have not seen before. So with so much uncertainty, and the monetary policy between the countries are now also diverging. Growth scenarios are also diverging. So it's so much of uncertainty around us. If you give a forward guidance, you will be sort of leading the market in one direction, and if something happens the other way, something goes wrong, and you will not be able to keep up to your forward guidance, then you would have unnecessarily, without any outcome, without any consequence, without any positive impact for anyone, you would have probably encouraged the market to board the wrong bus or the wrong train. So you would have directed the market in one particular direction. So therefore, we do not give forward guidance in terms of when I am going to increase the rate, how much we will increase. We don't give forward guidance in that manner.